Good morning. If anyone can hear me, if you could please let me know in the chat box. Cassandra, Michael, Tiger, anyone hear me out there? Oh, good. Okay. I'm actually going to allow everyone the ability, if you have any questions, to please click your unmute button and chime right in. I think we're going to have a manageable audience. Looks like we've got about 5, 6 people, but love that size. It really uh, helps me coach people on a one-on-one basis. So if you could let me know if all of you came from my webinar last Wednesday, or if anybody is unfamiliar with what I do and how I like to help people. Okay, let's see what we've got here. I want to check on our Facebook friends. We are streaming live on Facebook and YouTube. Okay, it looks like that is all good. Okay, any questions along the way, please don't hesitate to uh, type it right in the chat box. I'm running solo today, so I'll try to keep on the Zoom chats as much as I possibly can. With regards to the Facebook friends and YouTube live people, I apologize. I can't really monitor that at the same time as doing the webinar. So please do not hesitate to reach out to me on a personal level. Since we have such a small audience, I'm going to give you my cell phone number, 248-252-7283. Always a great number to get a hold of me. My goal today is to give you enough confidence that you're going to schedule a call with me, and I can help map out a plan to get your credit scores where you would like them to be. So with that being said, I'm going to jump right into it. I try to keep this to under an hour just to be respectful of everybody's time. There are a couple of new tools that I want to introduce to people as well. So if you've been to any of my previous credit building webinars, this one's just a tad bit different. So who is today designed for? Today is for people who have credit scores in that 500 to 600 area. And my goal is to give you enough information that you can get a quick bounce in those scores. A couple of tools that I'm going to give you will probably help get your scores up at least 60 points. So this is a very similar presentation to my 60 points in 60 days webinar. So keep in mind, a lot of this may be repeated from there. So sorry, just want to make sure I got everything on mute here. Okay, so if your scores are 500 to 600 right now, you are in the right place. If you have no credit scores, we're going to give you some ways to build credit scores very quickly. If you had a recent bankruptcy, repossession, or even recent collection accounts, we're going to give you solutions, how to handle those, how to build credit after those traumatic events. And just for anyone who wants to understand how the credit world applies in the mortgage world, what they look for, and how we can possibly manipulate those scores in a relatively short period of time. So let me hide this here, and we will get right into this. Okay, apologize. So why do I do this? So I do this because there's just so much misinformation out there in the credit world, and oddly enough, common sense does not prevail. So before you make any decisions to pay off collections, please revert back to that area. Sometimes people think paying off old collections is a good thing to do, and sometimes it is, but many times it isn't. So, and I'm going to touch on that in a few moments. The other reason is the rental market. Right now, the rental market is in tough shape. In addition, I just noticed, just saw a report about 3 days ago that credit scores, at least in my neck of the woods, which would be southeastern Michigan, specifically Detroit area, credit scores are actually plummeting right now. I'm seeing a high amount of credit card defaults, 30-day lates, auto loan defaults, things like that. So unfortunately, the economy is not nearly as robust as many would like us to believe, and that's at least my opinion, or at least with the people that I work with. I also find that a lot of people tend to overpay for credit. Right now, gosh, used car loans. It's not uncommon to see 20, 25% on some of these used car loans. I understand it. We need to do it, and I do appreciate that there are companies out there that are willing to support the people that need it, because right now the mass transit system in southeastern Michigan, it just is terrible to say the least. So if you don't have a car, you're not getting around. So that being said, I find that a lot of people are overpaying for credit from a installment loan standpoint and from a credit card standpoint. So as much as I am an advocate of these things for building credit, we want to try to watch what we're paying from an interest rate standpoint as well. So, okay, so my goals this evening, not this evening, it's actually morning. So my goal this morning is to teach you how to get your credit score up at very least 60 points in 60 days, how to identify areas on your credit report that are ripe for getting a quick spike and great to use for a quick impact, help you build new credit if we need to do that, and set some reasonable goals and predictable timelines. I can give you all of this information, but if it's something that's going to take more than 60 days, it's probably not worthwhile in my mind. I like to get people items that are there for a quick impact for you. Okay, so with that being said, let's jump right into things. I find that sometimes it's best to understand how the credit industry relates to the mortgage world and how they use it. So there are quite a few credit bureaus out there. There are still just the three big boys, for lack of better words. That's TransUnion, Experian, and Equifax. Now, the mortgage world, for the most part, works with the middle credit score. Now, each credit bureau has hundreds of credit scoring algorithms. The ones that they look for in the mortgage world are your FICO 2, 3, 4, and 5 scoring models. So we want to stay clearly focused on those. So if not that some of the other ones aren't a good benchmark. So for example, if you go out to Credit Karma, use their credit scores, I don't know which one they're using. I think that's a proprietary algorithm that they use. That scoring model that's credit score is not going to be the same as the FICO 2, 3, 4, 5. I like using that platform just because it's free and it doesn't count as an inquiry. So it's a good benchmark to work off of. But I find that for the most part, the Credit Karma scores could be about 20 points higher on average than what we typically run into with the FICO 2, 3, 4, 5 models. So ideally, we want to get your credit scores up 600 or above. Right now, if you have a credit score 580 or above, I can get you down payment assistance money and grants and things like that. It's just that the higher the credit score is, the more money I can put on your radar. So, and that's what I'm all about. So most creditors are only going to report to one or two of the credit bureaus. So if you have, let's just say, Toyota Motor Credit, okay? Toyota's probably only going to report to two of the three. And the reason that is they have to pay. So it's very rare that a creditor is going to report to all three credit bureaus, unless it's a mortgage. Mortgage servicers do have to report to all three credit bureaus, but some creditors only report to one. You'll find most report to two. Now, in the mortgage world, They are going to pull all three credit bureaus, and they're going to pick the middle credit score. That's what they're going to use. They don't average it. They don't take the median. They take whatever that middle score is. So if you have a credit score of 500, 600, and let's just say 630, they're going to take that 600 credit score. So when we are looking for opportunities or ways to bump your credit score, we're going to focus on the middle credit score and the high credit score. We want both of those to be above whatever threshold we're shooting for to get you into whatever program or grant we're trying to get you into. So there are several areas that go into a credit score, and they are, number one, payment history. Okay, so if you have any recent late payments on your credit, that's what's going to hit you the hardest. So if you're currently late on your credit and then catch up on it, your scores will go back up, but they're not going to go back up to that same level. So if you're currently late, bring it current. Your scores will drift back up. You might get 50% retracement from where you were originally. So payment history is a big part of it. Once that late payment is over 12 months, you can possibly drift back to where you were. It usually takes a couple of months to retrace to the maximum level. Then it's going to just, time is going to heal that. So payment history is 35% of what goes into your credit score. 30% of what goes into your credit score is based on utilization or credit limits. So this is a key point. I want to focus on this because this is one of the things that we use to manipulate your credit scores. Right now, the credit scoring algorithms, and this is just my opinion, are smarter than ever. Okay, they are really rewarding people that have the ability to pay down their credit cards right now. Okay, we're looking at credit card default rates, auto loan late payments. They are at the highest level we have seen in closing in on 30 years right now. So for whatever reason, just not getting a lot of media attention, but it's happening. So if you have a credit card, let's just say a credit card with a $300 limit and it's maxed out at $300, it used to be, I would tell people, pay that balance below 30%. So 30% of 300 is $90. If we pay that below $90, I would tell people, hey, your score used to shoot up 20, 30 points. I'm finding now that type of maneuver is pushing people's scores up, could be 30 to 50 points. So having the ability to pay down credit cards in an environment where default rates are increasing really gives you a lot of benefit. So keep that in mind. So a lot of the things that I work with and when I speak with people is, hey, what credit cards do you have? Where is your utilization? Now, if you have a credit card that's over the limit, I get excited about that. So if you have a $300 credit card and your balance is $325, you made a mistake and you went over your limit, that's when they really start hitting your scores. So if you, it may not be a late payment, but I get excited because it's very correctable. So if you go over your limit, you're penalized even more. So the fact that you could take that from being over your limit, pay it down below 30%, easily a 50-point bounce out of that. So when I talk to people, one of the first things I do, I try to find out where is your credit utilization in relationship to your overall credit, and I can usually coach people to get quick bounces and spikes that way. Length of credit history. If you have certain things that are on your credit, even though you may not use it, don't close it. Every now and then, I'll have people that will, oh gosh, I haven't used that Fingerhut card in 5 years. You close that card, boom, their scores go down. Okay? Don't play with closing accounts. Don't pay installment loans off too. So I had someone 2 months ago, they only had 3 payments left on their car. They thought that they were going to help themselves by paying that car loan off. No, what happened is they paid the loan off, zeroed it out. Excuse me. That loan is now gone. It's not gone. It's showing as paid off, but they lost a trade line. Their credit scores went down quite a bit because they didn't replace it with a new one. So do not pay things like that off without talking to myself or a mortgage professional to get some advice on that. Okay. One thing I didn't mention was if you have credit cards and you're going to pay them down, I'm finding people are getting a little bit better lift on their credit if they leave a slight balance versus paying it down to zero. So if you pay something, want to pay your credit card down, pay it down, leave $10 on it, $20 on it. Don't pay it down to zero. Okay. May not seem like a big deal, but I'm finding that people are getting a couple of extra point lift by having a small balance versus zero. So, and when it comes to qualifying for some of these programs, it can be a game of inches. 1 point can make a difference. So for example, I was just on the phone with someone, we're trying to get into the state of Michigan program. That program is a hard 640 credit score. If your credit score is 639, you're out. 640, you're in. There's no negotiations. So sometimes, it may seem, trivial to fight for a point, but that point can make a world of difference when push comes to shove. Another thing that they look for are frequency of new credit. Okay. At what rate are we adding new credit to your credit profile? So I always tell people, like I said, the algorithms are getting very smart. So don't open accounts unless we have a high degree of certainty that we're going to get them. Okay, so don't just shotgun a bunch of credit card offers out there on Credit Karma and see which ones you get. If next thing you know, if you're denied for 4 of them or 3 of 4 or whatever, it's just not, it's not worth it. You're going to have all these inquiries, your score is going to go down, and the algorithms are, like I said, are getting smarter. In 2-3 months, if they don't see new credit being opened up, that could negatively affect you. So, anyway, so please don't open new accounts unless you have a high degree of certainty that you're going to get them. And don't just listen to what Credit Karma or Credit Sesame or some of these things tell you. They might say, oh, you have an 80% likelihood of getting approved for this credit card. Don't fall for it. That's how they make their money. Everything they give is free until you start asking for credit through them. That's how they make their money. So they sell your data. So that's what goes into into your credit score. The other thing is, one last thing, types of credit used. Okay, so credit diversity is another thing. So if you have an auto loan, a couple of credit cards, maybe a line of credit, that is great credit diversity. Okay, what we don't want to do is see someone with like 10 credit cards and that's it. Okay, it could very well work, but you don't get that lift from having a little bit of diversity on your credit. Okay. Any questions? All right. I'm going to go into the next area, my goals. Oh, sorry, we already covered that. Okay. Next thing I want to touch on is how do we handle the big things that tend to trip people up on your credit? And those things in my mind are student loans, repossessions, bankruptcies, and collections. So student loans are a big conversation from the standpoint that a lot of programs have they all have certain guidelines as far as how they will handle student loans. So it's important we know how big are all the student loans. In other words, if you have 10 student loans at $5,000 in each, I want to know if you have a $50,000 balance with all your student loans. That's what I need to know in order to coach you in the right direction. So student loans in deferment does not work well with getting a loan. They want to know, what are your payments going to be for the foreseeable future? A lot of people had their loans deferred because they're still in school, or forbearance. They should be coming out of forbearance for COVID, but just the same, a lot of people have not started the repayments yet. So we need to get you into a repayment status. So the status for many people can be zero payments. Okay, they may do an income-based repayment plan and say that you don't need to pay anything, your income's too low. On the surface, sounds good. On the backside, keep in mind, your balance is going up every single month. Okay, and student loans are one of those things that just don't go away. Okay, unless you prepare for them, and prepare for them by way of making sure, working for a nonprofit or the government, there are ways to extinguish your student loans over a period of time. If anybody wants some help on that, please feel free to reach out to me. Always happy to point you in the right direction there. But if you are on an income-based repayment plan and the payment is zero, which they like to hand that out. So keep in mind, zero, but the interest clock's ticking, so your balance is going up. That will not work in the mortgage world. What we want to do is we want to contact your loan servicer and ask them to, hey, I don't want to watch my balance go up every month. I at least want to pay $10. So if you have a $10 a month payment, there are programs where I've had people with $200,000 in student loans where we were able to get a payment agreement of $10, $20, because they were income-based at zero. We were able to use that $20 payment to get them approved for a house. So they were able to buy a house even with a tremendous amount of student loans. Okay. Now, not all down payment assistance programs and grants will allow that, but there are a few that I work with that will. Now, for the most part, a lot of the programs will take 0.5% of whatever the balance is. So if you owe $100,000 in student loans, they're going to take $500 a month and they're going to count that against your payment. That's a big payment. So counting that against your income can really bite into the overall amount that you can get approved for when purchasing a home. So that's why I have student loans up here and spend so much time on it, because it can be a minefield. And I find that a lot of loan officers don't even have a good handle on how these things are structured, other than what they're told from the companies they work for. And there's a lot of workarounds. I just need to know what your situation is so I can coach you the best on it. So now, if your student loans for some reason are in default, I get really excited about that, because that's usually that's a negative thing. That's showing that your credit, you're in default, you're not making your payments. It's an easy switch. We just called your servicing company, get it turned back on, make 3 payments to your servicing company, and boom, they're going to show it as a positive. So I've had people that come to me and their credit scores are 550 because their student loans are in default. We just set up a payment plan, do it for 3 months, and they will flip it back and it'll show as a positive. So that 550 credit score can all of a sudden in 90 days shoot up to a 650, because now it's going to show as being paid on time. So there is a way to turn it around if you are in default. And then obviously we touched on income-based. Income-based repayment plans are 100% based on wherever your income is. And like I said, zero payments just aren't acceptable. So we have to work around on that. Now, repossessions. I'm running into a fair amount of repossessions lately. And more often than not, finding a direct correlation between where you buy the car. A lot of people purchase cars on some of those B lots out there, certain areas, and they're just not buying the best quality car. And then after they own it for 30, 60, 90 days, they realize that there's some serious issues with it. and something mechanically happens where a repair could be 3, 4, 5,000. It's just not worth it. So they let that car go. So, or they co-signed for someone and that one didn't make a payment. So all kinds of reasons that are kind of just beyond people's control. So there are ways to handle these repossessions. Sometimes we want to reestablish payments if we can. If it's not too late, we may give them a call, get those payments reinstituted. When we do that, I'm not saying we do that forever. I'm saying we do that so we can get the loan and get the down payment assistance programs or grants. What you do after closing, whether you keep those payments up, that's 100% to you. I'm here to show you how to get the roof over your head. So no judgment there, especially with some of these shady B lots out there. So, and some of these lenders, from an automotive standpoint, they're professional collection artists. I'll be the first to admit it. So, so when it comes to repossessions, it might behoove us to start repayments on it. If it has a low balance, it might even be possible to pay them off. Now, if your credit has a decent profile, if you've got a good credit profile and the only thing out there is a stray repossession, I'm actually getting people approved lately with not even having to pay those things off. So if we can look at your credit and see that that repossession was an anomaly, you'd be surprised. I would say 10, 20% of the time, people don't even have to pay those off. The algorithms, which are used for approving loans, are becoming a lot more friendly on that side of things, provided, like I said, it's an anomaly. Third thing I want to talk about here, bankruptcy. There are two types of bankruptcy on a personal level. There's Chapter 7. That's when you just wipe the slate clean, everything's gone. And then there's a Chapter 13. That's basically reorganization. So in a Chapter 7, it takes about 2 years after the bankruptcy is discharged to purchase a house. There are some exceptions to that if it's a catastrophic event, okay? And it's a tough thing to sell. I've only been able to do it once, and that was a lady that unfortunately came down with cancer. She went into bankruptcy, was able to wipe the slate clean. We were able to document that, and she was able to purchase a house 1 year after a bankruptcy, okay? Never been able to help anyone else. 2 years after the bankruptcy is it. Now, that 2 years goes quickly. So the thing is, the day after your bankruptcy is discharged, we want to start building credit right away. We want to get secured credit cards, secured loans. It's important that once you do it, you maintain it. If no late payments after the bankruptcy. The algorithms that are generating your credit scores, like I said, they're getting smarter and smarter. They know that once a Chapter 7 pops up, you've got to pass for 10 years and you just had everything wiped out. So as a result, they're going to give you the benefit of that clean slate, and they're going to give you some great responses with regards to your credit score. It's not uncommon for people right after a bankruptcy, add a couple secured cards, add a secured loan. Next thing you know, you've got a score above 700. Okay, you give me someone a day after bankruptcy, and let me put a couple of the credit building tools I have to work. I guarantee you, your credit score will shoot up in the 700s, provided no other baggage hits. Okay, so Chapter 7, very easy to rebuild from, but it does, the guidelines are we need to wait 2 years. Now, Chapter 13, when you reorganize, and what that is, basically you take all of your debts, they put it into a pool, they negotiate the balances down, and then you start paying a bankruptcy trustee for 5, 6, 7 years, whatever the term is, and the trustee forwards that money to the creditors. As long as you make 1 year timely payments to the Chapter 13 bankruptcy trustee, you can purchase a house with the trustee's approval. I've only had a trustee fight me once on this, and the bankruptcy attorney representing my customer, or mutual client, I guess, actually had to threaten to take the trustee in front of the judge, and because it made sense. He was actually buying in Waterford, and his kids were in Waterford schools. So renting a house there was going to cost him almost $2,000 a month, where if he bought a house, he could do it for $1,500 a month. Well, the trustee basically denied our ability to do it. And once the bankruptcy attorney filed a motion to go before the judge, he did cave and he allowed us to purchase it. So, but outside of that, I've done this half a dozen times and always been successful with it. So as long as you've had 1 year timely payments to the trustee, you can actually purchase a home while in Chapter 13 bankruptcy. The issue we run into is, for whatever reason, the Chapter 13 bankruptcy guidelines in the mortgage world, I think, are behind the times. There is some chatter that they're going to be changing this, and hopefully they already have. But once your Chapter 13 has completed, be it 5, 6, 7 years down the road, you have to wait 2 years after that to buy something. It falls under the old Chapter 7 bankruptcy rules. Don't know why that is, but like I said, once you're in a Chapter 13, you can certainly do something. So, and then the last part, collections. Collections are always the thing that trip people up a lot, and they tripped me up as well too. Remember when I bought my first house 30-something years ago? Actually, it would have been 35 years ago, maybe, just because I have a 32-year-old son. It was a couple years before we had him. Anyways, I thought that, hey, I've got some old medical collections. And by the way, right now, medical collections don't count, but I would pay those little ones off. I thought it was helping me. It doesn't help, okay? So when it comes to paying collections, if you have anything that's over 2 years old, please leave it alone, okay? We don't want to address that. Think about it this way. If you have a collection, let's just say old cable company. A lot of people, including myself, forget to return one of those cable boxes. Next thing you know, there's a stray collection account for $200 popping up on your credit. You don't realize it. 2 years goes by. If you pay that old collection, it's going to show up on your credit report the following month after you pay it as collection paid, March 2025. You've reactivated that collection account, so your credit scores will go down. So if you've got old collection accounts, I always tell people, just let those sleeping dogs lie. No sense paying them without a high-level conversation, because it will drag your scores down. Now, with the techniques that I'm going to teach you today to purchase a home with, our goal is to get your score up as high as we possibly can to get you approved for whatever program we're steering you towards. Keep in mind, once your score is to the level where we can get you approved, we're going to lock that score in for 90 days. So if a underwriter, and underwriters are in the mortgage world, those are the people that approve your loans. If an underwriter comes out and says, hey, loan's approved, everything's good, but we want you to pay off that old cable bill, that's absolutely fine. We'll pay that $200. Actually, we could probably go back and negotiate and pay it at 50 cents on the dollar. Okay, they don't care how much you pay. They just care that that collection is settled. So we'll go back, we'll take care of that. Now, if your score goes down, we don't care. We've already got it locked in at the approval level. Okay, it may go down. It may show up a couple months down the road as paid as agreed, 50 cents on the dollar. Don't care, I'm in the house. Okay, so that's how I look at some of those old collections, if we even need to. Lately, if it's a collection account below $500, a lot of them won't even ask you to deal with it. The underwriters won't even bother you to pay those off. If it's a collection account above a couple thousand, they may ask us to get that paid off, which leaves us leverage. Now we can negotiate with it. Okay. Now, if you have a collection account that's a medical, don't worry about it. Medical does not count any longer. Shouldn't count into your credit scores, shouldn't be on your credit reports, okay? Or shouldn't be factored into your credit scores. If you have a collection account that's 1 to 2 years old, a lot of those we want to try and run through a simulator. And we want to put your credit through a simulator to determine how is your credit score going to react if we start playing with these collections. Sometimes it doesn't make any maneuvers at all. We'll just leave it and see how it plays out. Sometimes we might get a bump out of it, okay, depending upon how big it is, how old it is, and what type it is. The third type of collection is something that's 0 to 1 year old. Those are things that we typically need to address. So if you have a recent collection, in other words, within the past 30, 60 days, those are things that might be worthwhile paying off. If we pay them off, your score may bump up from there, okay, significantly. So if it's older than 60 days, it's case by case, and sometimes we need to run those through the simulator as well. But we definitely have to address anything that's less than a year old from a collection standpoint. We'll need to address it with either some type of letter of explanation, maybe negotiate the balance down, maybe pay it off. It depends on what type of collection it is, the size of the collection too. So that's how I handle the 4 biggest pain points I'm running into right now: student loans, repossessions, bankruptcies, and collection accounts. Any questions? All right, I'm gonna jump in now to my steps on how do I handle taking care of some of this negative information, getting a quick spike in your score. Okay. First thing we want to do is we want to get a copy of your credit report. Go to freeannualcreditreport.com. They won't give you the credit scores unless you pay for them. Don't know that you have to, but we want to know what's on your credit report. So get your free credit report. If it's not too expensive, maybe pay for the credit scores. It's nice if you can get at least 1 or 2 credit scores so we know what we're playing with there. We want to focus on the middle and higher score. If the higher score is above the threshold of where we need it for the program we're trying to target, then fine. If the middle credit score isn't, that's what we want to focus on. Remember, we want to get that middle score and high score above where we need it to be. We want to understand what's driving your credit scores down. Is it late payments? Is it collections? Is it credit utilization? And sometimes there may not be credit. We may need to build credit, okay? So we need to have at least 2 or 3 what they call trade lines on your credit. That can be old stuff, it can be new stuff, or alternative trade lines. Now, a trade line is just a line of credit, okay? You could have an old auto loan that's paid off. That's fine. That's one. You could have a new one. That's fine. It could be an old credit card. Old credit card that was collection charged off, that doesn't count. We need to get some good, we need to have 2 to 3 positive things on your credit. Now, with the absence of that, we can take certain things that you're paying on that don't report to the credit bureaus, and we can get those things added to your credit. And those are called alternative trade lines. I'm going to focus on those in just a few moments. Then what we want to do, we want to run any adjustments we're going to make on your credit through a credit auditor or simulator, just to get a feel for where will you end after we make some of these adjustments. Okay, if it's not predictable, I know if we pay credit card down, what's going to happen. No need to run that through. But there are some other things there are gray areas, and those gray areas are things that the reasons we want to run you through those simulators. Now, if we need to add credit because you have a thin credit profile, you don't have those 2 to 3 trade lines, we can add secured credit cards, secured loans, or ask a friend or family member that may have good credit to be an authorized user on their account. Not such a terribly difficult conversation because you're not asking for money. I'm just asking for some help, okay? I can get approved for this down payment assistance program to buy a house if I have 1 more trade line showing up on my credit. Any way you could add me to one of your trade lines. I don't need the credit card. I just need the credit juice you've built up. If you could share some of that with me by adding me as an authorized user on your account, it would help quite a bit. So it's not as terrible a conversation to have or as awkward a conversation with a family member or friends. Also, if your credit scores are below 500, sometimes we do need to send some dispute letters out and dispute what's going on credit reports, okay? I find that those don't work as well as they used to, okay? And I'll touch on those in a little bit because there are some credit building companies or credit repair companies that are advertised out there that their services used to work well for people for what they were. I'm not a big fan of them any longer. I find that a lot of the credit bureaus are kind of calling their actions frivolous and not responding to the requests to remove derogatory credit nearly as much as they used to. So, things to do. Like I said, we want to subscribe to those credit monitoring services. Credit Karma is a great one. It's free. Don't forget to get your free annual credit report. When you subscribe to Credit Karma, they'll give you a free credit score. It's not the credit score they use in the mortgage world, but it's a good benchmark to work off of. If you can't get into Credit Karma because it gets kind of finicky sometimes, there's another website I like called Credit Sesame. Now, for those of you that are very serious about getting your credit turned around and doing it right away, there is a lender that I work with, okay? It's Belong Lending, and the gentleman's name is Julian. They have a link, and I actually just clicked on this right now, Belong Lending. They're on Woodward in Detroit. You can actually get your credit report here, and they will give you a mortgage credit scores as well too. Okay, so you just need to put in your name, all your pertinent information. They do charge for this. Okay, so that's why I say if you're serious about getting your credit scores up, this would be the first step I would do. Okay, it's a lot less legwork. If you go to freeannualcreditreport.com, they're going to give you the similar data, but it's not going to be organized in a format it's going to be Latin to you. Okay, it's Latin to me, and I've been in this industry for 37 years now. So Belong Lending doesn't make money on this. They actually just pass it right through. So what I like about it is just send me a quick text and I'll send you, actually, you know what? Let me see if I can put the link right in here right now. Bear with me 1 second. Copy. Here's the link. What I like about this link, they do charge $70, but they're pulling all 3 credit bureaus and they're pulling all 3 credit scores for the FICO 2, 3, 4, and 5 models. The reason I suggest this and like it so much is they can take your credit and put it through a credit simulator and tell you exactly what to do with a 90+% degree of accuracy. Okay, so I would rather see people do this than go to some of the credit repair places, National Credit, Lexington Law. Those companies, they just don't perform the way that they did, 5, 10, 15 years ago. And that's just because of the digital world that we're in. The credit agencies or repositories, as they call them, are able to push a lot of requests aside as frivolous. So this is sharpshooting. Okay, so this, in my opinion, first step I take, it is $70, but you will get the whole report. They'll run it through the credit simulator and they'll tell you exactly, okay, pay this card down, pay this collection off, leave this one. They'll tell you exactly what to do to get your score up to the level where we need it to be, so we can point you in the direction of whatever down payment assistance program or grant you're looking for. So this is a one-time fee, okay? So I like it a lot better than paying $100 a month for Lexington Law, and that's just their cheap version. Someone not a couple webinars ago was telling me they were paying $200 a month for Lexington Law, and they just weren't getting much benefit out of it. So anyways, so definitely like Belong Lending and the service that they're willing to provide. The fact that they're able to coach people and put them through the simulator for free once they have your report, that to me is huge. Okay, another thing that we can do to get your credit scores up, or we should do, is get those credit card balances down as low as we can, typically below 30%. That's the benchmark. If you pay your credit cards down below 30%, that's getting you the best lift or the best bang for the buck. So if you're able to pay it down to $10, you'll get a few more points out of it, but we find that getting your credit utilization below 30% is key. Now, sometimes, remember, please don't pay those balances off. Try to keep a few dollars on there. It used to be where I would tell people just to go, call the creditors, try to get a credit card increase to reduce your balance below 30%. I can tell you right now, there's no credit card agencies that are giving out decreases or increases, excuse me. In fact, sometimes they're giving out decreases. Another reason to not pay your credit card down to zero. If you pay your credit card down to zero and haven't had a good history, they might close it on you. Okay, so in my personal opinion, pay your cards down to 30% first and leave it. Okay, they're not going to close your account if you owe them money. Okay, just a little tip for the way I think the market's trending right now. If at all possible, maybe ask a friend, family member about becoming an authorized user. If you have that thin credit profile or don't have any open trade lines right now, you want to open a secured card or secured loan as soon as possible. And if that's not an option, we want to start gathering some items that we can add to your credit as alternative trade lines. Cell phone bills, rent, car insurance, subscriptions. I'm going to give you a full list in just a couple of minutes. And we want to think about setting up payment arrangements with any serious collections over $2,000. Before you do that, I think we should talk because sometimes that money be better served going other places versus doing that. Okay, things that we don't want to do, okay? Please pay attention here. Do not apply for new credit unless you know you're going to get it, okay? So don't just blindly apply for things that will drag your scores down. Don't blindly pay off your collections. We talked about that. Don't pay off your credit card balances to zero. Leave a few dollars on there, please. Don't pay off any installment loans. We don't want to lose any trade lines. And don't become an authorized user on any accounts that have any late payments or credit cards that are maxed out, things like that. And please do never, ever employ debt consolidation services. Those companies are starting to surface right now, okay? If you are in a spot in your life where you think a debt consolidation service may help, I think you're better off entertaining bankruptcy, okay? Because in the lending world, specifically the mortgage world, if you go into debt consolidation services, that's the same as going into bankruptcy without the protection of the bankruptcy courts. So if you're in that hard of a spot with your life, I'd say go into bankruptcy and at least have the protection of the bankruptcy courts. What the debt consolidation companies do, they take your debts, they put them all together, they negotiate the balances down, just like the bankruptcy court. And then what they do is they take their fees. So whatever you pay them for the next 6 months or so, they're taking 80, 90% of that, and they're pocketing it, and they're only forwarding a small percentage to your creditors. And just when your creditors are so ticked off that they don't want to deal with you anymore, then miraculously the fees for your consolidation company are paid, and they can start paying things down. But that whole process, you don't have the protection of the bankruptcy courts. So I'm a firm believer that debt consolidation companies are just never the way to go. And as times deteriorate from an economic standpoint, I find that these companies are starting to surface more and more. So please, navigate around them if you can. So those are my steps. I want to give you some credit building tools. Okay, first thing, secured credit cards. Love them. Everyone's virtually guaranteed to get them, unless you've maybe burned the company and didn't pay them at one point in time. But I find that Capital One, you send them $300, they're going to send you a credit card with a $300 balance. Okay, that's going to increase your credit scores 20 to 30 points in 30 to 60 days. Once you get that secured credit card, it's important that you use it right away. It forces them to set it up on your credit report. A lot of times they'll send those cards out, wait for you to send your money in. So, and once you send it in, it doesn't always match up the way that it should. But once you use the card, boom, they'll get that data out to the credit bureaus right away. And that's what we need. Try to keep those balances below 30%, paying down as much as you possibly can, leaving a small balance like we've discussed. So there are a few other secured cards out there. I find Capital One is just one that I like. I tend to work with a local credit union, Michigan First Credit Union. They have a secured card as well. So if you like to deal with things on a local level like I do, great. Secured loan. This secured loan, there are a few companies that offer them. There's one through Michigan First Credit Union that I absolutely love. I've recommended this program for years. It's served my customers extremely well. I've had several family members that have used this particular program, and it's done wonders. What it is, Michigan First Credit Union you basically go in, you'll open an account with them. You'll give them $525. What they're going to do is they charge $25 to actually do this. So that's gone. Then they're going to take the $500 that you give them and they're going to put that in a savings account. So it's locked down. You can't touch it. It's going to show that it's there, but you just can't pull it out. At the same time, they're going to put $500 in your checking account. That's money you can use right away. So it's going to show you have $1,000, $5 in each account. But like I said, the $500 in the savings is locked down. Then you're going to pay that $500 loan back over 6 months. So they're going to take $80-something a month out of your checking account to pay that $500 loan off. Once that loan's paid off, they release the $500 in your savings account. It's yours to use as you like. The key to this is that when they report it to the credit bureaus, they report it as a personal line of credit, which is one of the hardest things to get. I've had people's scores go up 40, 50, 60 points. I had one person whose score went up 70 points using this secured loan. Now, they report this to 2 of the 3 credit bureaus, I believe. So someone told me that they heard that they were reporting it to all 3 credit bureaus, but either way, great tool for building credit. If you are tight for money, this is a great way to go because you're going to get that $500 back in your checking account right away. They do charge the $25 to do it, but keep in mind, you got to keep $85 a month. You got to pay that loan off over 6 months. So do not forget that. But great credit building tool. Authorized users. Understand, it's a tough conversation to have. It works well 90% of the time. Reason it doesn't work all the time is the creditors are supposed to mark things when you're added as an authorized user. And what they're supposed to mark is the start date that you're added. So when it pops up on your credit report, it'll show, hey, you were just added the date that you're added. But what happens is in the credit world, you're dealing with phone jockeys. So it's a manual entry. So a lot of times they don't do it. 90% of the time they don't put your actual start date as the date that you're added. They leave the start date from the original user. So for example, I had a young lady 6 months ago. Grandma added her to a Sears card. Didn't even realize Sears still had a credit card, but this lady had a $20,000 limit on her credit card. She only owed a couple of $100. I don't know. Online shopping, I don't know where she's going to Sears, but she does. And at that time, when this lady was added, it showed an open date of like 1976. Well, this lady wasn't born until 1990, but that open date gave her so much credit juice. Her score shot up from 550 to 650 by pulling this maneuver off. So I know that it's a manual entry for a lot of these data entry people, and all their calls are timed. So they typically just add the user, move on. So the things that we want to look for when it comes to being an authorized user, we want a seasoned account that's older. We want a low balance, low utilization, and good payment history. So keep that in mind. So, and keep in mind, when you're asking somebody, I don't need a copy of it. I don't need a credit card. I just need some help building a credit profile and need to add one more trade line. So if you could help me out on that, it would really help me get into this new house. So not as challenging a conversation as if you have to borrow money. I get that. So alternative trade lines. Okay, so this is what alternative trade lines are. When you don't have a lot of things on your credit report, we're able to take these types of items: rent, auto insurance, PO box payments, storage units, cable, cell phone bill, renter's insurance, utility bills, monthly subscriptions, Netflix, gaming, gym memberships. If we can show through your checking account, your debit card, whatever payment method you're using, that you've paid someone every month for 12 months, we can get that added to your credit report. Okay. And a lot of times it's just a function of getting your statements. I had a gentleman a few months ago, he had nothing, but he was a gamer. He was sitting in his future mother-in-law's basement playing games with, I think it was Wii and Sony PlayStation and Xbox. He had payments going out to these different, whatever, gaming platforms and different games that were taken out of his checking account once a month. We were able to take that information and get it added to his credit report to fulfill those 2 to 3 trade lines that we need. And as a result, we were able to generate a credit score for him, and he was able to get in using a down payment assistance program. So those are alternative trade lines. Credit monitoring services. Like I said earlier, I like Credit Karma, Credit Sesame. Experian is good too. If I had to pick a couple, I would go with Credit Karma. They'll give you TransUnion and Equifax, and Experian will give you Experian. So you'll get all 3 credit bureaus and all 3 credit scores. Okay, those are the 2 that I would probably work with: Experian and Credit Karma. The last thing, credit restoration services. You know my thoughts on those. Lexington Law is charging $100 to $140 a month. I think the premium service is up to $200. National Credit Care is charging $99 to $189. I don't think people need that. Not that it's a waste of money, but I find that they're not nearly as effective in the digital world that we're in as we once were. So it used to be what it is these companies just take advantage of the Fair Credit Reporting Act loophole, that if you send a letter saying there's derogatory information, the credit bureaus only have 30 days to investigate it with the original credit furnisher or provider and you. And 10 years ago, they could never make that deadline. And as a result, if they can't make the deadline, they have to remove it. Well, nowadays, they can make that deadline because it's just a digital conversation going back and forth. Okay. The mail system used to bog everything down, and nowadays it's just not the case. So also, with the amount of times that Lexington Law and National Care does it with their form letters, the credit reporting agencies have a thing within the Fair Credit Reporting Act, and there's a code in there that says if they feel like it's a frivolous request. In other words, if somebody writes a letter and says everything on my credit is wrong, they can say, no, chances are it's not wrong, it's a frivolous request. They'll set it aside. Okay, so the frivolous requests are being issued to people a lot more than they used to be. So as a result, I'm not a huge fan of either one of these platforms unless your credit scores are below 500. then it might be worthwhile sending these letters out for a couple of months. Okay, but when they do that, you want to make sure that they're not challenging any more than 5 items at a time. If you start requesting everything on your credit and there's more than 5, that's when they're going to respond as if this is frivolous and they won't do it. So, but just the same, I find that when we work with these credit restoration services, they're all about trying to fight the negative things on your credit. And when they do get there, it only lifts your score to the mid 500s. You need to establish new credit at the same time to get that lift above 6. Okay. So, and that's something they don't do. They don't work with issuing new credit nearly as well as I think they should. And it is a 1-2 punch, in my opinion. Okay. All right. So those are the credit building tools that I recommend. Where do we go from here? Okay. I always tell people, if you haven't been to one of my webinars, how to purchase with no money down, taking advantage of down payment assistance programs or grants, please take advantage of that. Gosh, I love educating people on the different programs that are out there. Let me get you the link to that. And please, right now, I'm going to open up for any questions out there. If you have any questions, just let me know in the chat box. I'll be happy to unmute you, or you can type it right in if you like. Okay, here is the link to my webinar. Haven't scheduled the next one yet. I'll do 2 weeks out. So it'll probably be the end of March will be the next one. I'll try to do that today. And then let's see here. Let me give you also a link to my calendar. If any of you want to book a strategy session to figure out what's the best way to attack your credit to get it where it needs to be, I'm always up for that. I'm kind of a chatty Cathy. I love educating people on this. Cecilia, you are quite welcome. Thank you so much. Thank you. What are the worst possibilities of not purchasing a home? I mean, I don't know what the worst possibilities are. I will tell you this. Here's a link to my calendar so you can schedule a call with me. If you follow the plan that I put out, there's not a doubt in my mind that you can buy a house within a couple of years. Whether it's 2 weeks, 2 months, or 2 years. I mean, I've been doing these webinars for probably 3 years now and coaching people like this, gosh, for probably approaching 10 years. It used to be where I would run ads on Craigslist. Gosh, that was in the beginning. Then I gravitated over to Marketplace, and I found that I spent half my time fighting people that thought I was rather scammy or that this was scam, and it's not. I mean, I help people all the time with these programs. So when I actually found the platform to build a webinar and help me get out to the masses, oh my gosh, this has been as much a gift for me as the people that I help. So I find that I can actually really get my message out there. So yeah. So anyway, so the possibilities of home ownership, you know, they're for everyone. And don't get me wrong, it's many times there's some people I've been working with for probably 3-4 years. That's because life just gets in the way of our plans and they got tripped up, and we'll get them back on track. So no judgment there. It happens to the best of us. So, but I do know I have a soft spot for helping people in these types of situations. So Juan, credit card utilization is almost at 100. It's the only thing throwing my score down. You know, Juan, it's becoming a huge issue, and it's just because that the credit card default rates, in my opinion, are skyrocketing. So if what we want to do is we want to look at what credit cards have the lowest limit, because, you know, if you have one with a $300 limit and we reduce it down to 30%, that's getting it down below 150. If you have a $1,000 credit card limit and we need to get it down, you know, that's a 30% of 1,000 is a lot bigger pay down than 30% of 300. So I always focus on the lowest limits first, get those down one by one. And you're going to find that if you have, let's say, for example, a $300 limit and then $2,000 limits, that $300 limit, paying that down below 30% is going to give you as much of a lift as paying down that 1,000. Okay. So hopefully that answers your question. Please, Juan, schedule a call with me. Love to go over your personal situation and maybe even hit that link that I put up there for Julian with Belong Lending. I'm a big fan of getting into that credit simulator, and now we're sharpshooting. So is asking for a high limit better? Well, you can always ask for a high limit, but I'm going to tell you right now, they're not increasing limits for anyone. Credit card default rates are through the roof right now. It's just not going to happen. Okay. I mean, you can make that call and you may get lucky, but in my opinion, they're 5 years ago, yes, they would increase the limit a little bit, but not nowadays. Now you're just, it's a waste of effort in my mind. So good. Thanks, Juan. So Cassandra, I hope that makes sense. So, it may be worth a phone call, but I just don't, I'm hearing the exact opposite. I'm hearing people are paying credit cards off and then they're closing accounts. That's what I'm hearing. I'm not hearing they're raising limits. I haven't heard that in a long time. I actually should remove it from my slide. So any other questions out there? All right. If you could, a couple of favors I should ask of people. Number one, please go to my, here's a link to my YouTube channel. If you could go to my YouTube channel and my Facebook and follow me there. Boy, that would really help me out. I'm really trying to get my, hit that twice. I thought I got the other one. Yeah. Oh, there it is. And here is my Facebook. If you could go out and register or follow me on Facebook or YouTube, I would appreciate it. It really gets that subscriber count up, and it really helps me pass the message along. My goal is to just help as many people as we possibly can. Michael Johnson, I want to get in contact with the company that charges $7 for the credit. I know exactly what I need to do. Oh, absolutely. Here, let me get that to you, Michael. Okay. Let me know after you do it, Michael. Please send me a text. Here's my phone number, 248-252-7283. Just send me a text. That way I can make sure that they keep on top of it. I want to make sure that they know to go in, look for your credit, hunt you down, and get you through that simulator so they can start sharpshooting and telling you exactly what to pay down. Okay? All right. Okay, so please schedule a time with me. I do these credit webinars typically the Saturday after I do my webinars, so you're always free to attend there or reach out to me, book a call. Always happy to learn your situation, put myself in your shoes and tell you what I would do. So whether you're purchasing or looking to purchase in 2 weeks, 2 months, or 2 years, it doesn't matter to me. I really do just enjoy helping people get to that level with very little money out of pocket. So it's not uncommon for me to help people get into a house with less than a couple $1,000s out of pocket with my team and my coaching. So if you have any questions, never hesitate to reach out to you. You've got my cell phone number. Always try to pay it forward with as much educational content as possible. But everyone's situation is always a little bit different. So I certainly understand and appreciate that. So schedule a call with me, and hope our paths cross again real soon. So thanks for attending on a Saturday. Hope everybody has a great weekend. Okay. You're welcome, Celia. Goodbye.